Right, so you mentioned Flash Boys, and Michael Lewis's book, I think, if he didn't say this explicitly, a lot of people took away from it, was that the game is rigged, essentially.
Right.
Do you think it's rigged, and can you explain what IEX will do to help the individual investor out there who's trading maybe 100 shares of IBM or whatever the stock might be?
Yeah, I mean, the way the market is designed is unfair. And what that means is that when a trade takes place, a lot of times the trade takes place with one party knowing the accurate price of the stock and another one not. And that's because the exchanges sell this different tiers of access. And so what IEX set out to do is, with the speed bump, is to ensure that when we're matching buyers and sellers, that we're matching them at consistently fair prices, where both parties are informed of what the correct price is. And the speed bump is about slowing a certain group of traders down, although everyone, an investor, everyone's order has to come over the speed bump, but it only matters to a very small number of people. But 350 microseconds is enough time for that information to disseminate properly and for us to trade those orders at fair prices. So I would say that unfair is probably a better word. He used the word, I've said it before, but I think it's if you're trying to say that the investment process is broken, buying and holding stocks and owning companies, I think that process is fine. I do that myself. I think if you're saying are exchanges creating a fair atmosphere for matching buyers and sellers, I'd say absolutely not.
It's not high-frequency trading per se that you have an issue with. It's how the exchanges give them an advantage if they're going to pay for it.
Yeah,
basically.
if you're to say who's most culpable for the market that we are living in right now, it's the exchanges. They could all have made a different choice, and they all chose to sell these advantages to this group of traders. And I think that part of why they fought us so aggressively. I mean, they were down, lobbying very aggressively against us. Part of it was they don't want the competition. But the other part of it is that when they're, they make more, take New York Stock Exchange makes more money selling the high-speed data and technology than they actually do from trading. Like, think about that, right? The exchange is supposed to be about matching buyers and sellers, and they make more money selling all of this other stuff than doing the primary business that most people think that they do. If a speed bump is really what investors start to flock to because of the protection it offers, what does it mean to sell speed if one of the primary factors of your competition is not having that speed? So I think it in a way jeopardizes how they currently make money.